Joining us now, IBM Vice Chair and former NEC Director Gary Cohn. Welcome back, Gary.
Thanks for having me, Sarah.
It's good to have you on this inflation day. So you think
or de-inflation day.
Or de-inflation.
De-inflation day.
Disinflation.
Yeah, disinflation day.
Is it enough evidence for the Fed to make a cut?
It's clearly a step in the right direction. I think the data has started to swing in the direction that the Fed would want to see it. I don't think we're there yet. But as you pointed out, there's a bunch of data points between now and September. We'll get 2 more CPIs, we'll get 2 more jobs reports. And clearly the trend right now is very friendly to the Fed and the Fed's desire to cut interest rates. And I think if you take Chairman Powell's testimony earlier this week, that he clearly does not want to be late to cutting rates, as we all accused him of being late for raising rates. When we saw inflation rear its head, they were trying to dismiss it as transitory. I think on the way down, the Fed is going to be very sensitive about getting in front of cuts and not being late.
Are they going to be late?
I think at this point they're not late. I think at this point.
You mean if they cut when? In September?
I think based on the data we see today, I think September looks like an appropriate time for them to start cutting. We're starting to see data. As you saw, and I've said many times as chair, this data are single points. You've got to see the trend. 2 months ago, we were on here talking about the unbelievable employment numbers. Then they revised them all back down a month later. The CPI data is not nearly as volatile. The GDP data gets revised a bunch. So we've got to understand what the trend is. Right now, the trend, because a lot of the data is starting to pile up in the same direction, looks like the Fed should start cutting in September. But at this point, they're not late. If we continue to see this data in this direction, I think all lights are green for September.
So do you think they get away with this whole cycle without seeing a recession?
I've been in that camp. I'll continue to be in that camp. And I think, in spite of having been late to the party on raising rates, I think the strength of the underlying economy, the strength of the investment that's being made, we will get away getting through this cycle without seeing a recession.
So what is the cycle? What is the business cycle then? Is there a downturn?
Again, we're going back to this normalizing cycle. We went from a very normal economy pre-COVID. We went through all the COVID stimulation. We went through a fundamental tax change in the United States. We went through all the after effects of COVID. And now we're normalizing back to what we would have looked like had we not gone through COVID. And I think that's the business cycle that we're in. We're in a business cycle where companies are repatriating more foreign earnings. They're investing more in the United States. They're investing more manufacturing here in the United States. People had more disposable income. As you pointed out, people are traveling less. They're going to more ball games, and they're buying hot dogs when they get there. So that's a normal economy for us.
So bigger risk right now is economic downturn or inflation stays sticky?
I think the bigger risk is that we slow too fast. So, I guess you would say that we have an economic downturn, and then everyone would say the Fed is late to the game. The Fed's got a very tough balancing act here. They don't want to move early because the worst thing they can do is have inflation rear its head again. We've all said that. The worst thing they can do. And remember, there were people calling for the Fed to cut rates months ago. If you look back at the beginning of the year, we were talking about 6 rate cuts for the year. We're now down to 2, which seems appropriate. The Fed moving too quickly on cutting rates and having inflation come back would be the worst choice. I think all the governors would agree to that. Them moving a little bit slowly on the way out is probably the right thing to do. But I think the risk is the economy continues to turn down. The economy right now is very balanced. Everyone's anticipating rate cuts. We're anticipating fairly good earnings cycle. We're anticipating nothing really crazy in the geopolitical cycle. So we're sort of in a neutral, balanced state here. And something could throw that off. August is always a strange month in markets. We always have weird events in August. So, I'm not going to sit here and say, look, it's going to be smooth sailing from now till September. We've got to get to September. We've got to see the data. We've got to understand what's going to happen.